Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending October 28th, 2022. Looking at the market indexes for the week, the TSX, S&P 500, Dow Jones, Nasdaq, and Russell 2000 were all up for the week. Oil was up also, but gold was down. On Wednesday, the Bank of Canada released its interest rate decision, and while 0.75% was expected, Tiff Macklem only raised the rate a 0.5% to a total of 3.75%. This is because the central bank may be looking at lower inflation numbers, but also expecting that their previous hikes take time to take effect. And so as to prevent a recession, or at least a harsh recession, decided to slow the hikes and let the previous hikes do their work. The TSX liked this slowdown and went up on the day. The central bank move can be seen as a quote unquote pivot, but instead of cutting rates as the pivot used to be thought of, now a pivot is the slowing of the rate hikes. Another rate hike in December is expected, perhaps only 0.25%, and that would conclude the rate hikes for the time being. Other things the Bank of Canada is keeping in mind might be our real estate, which is a big part of the economy and is being affected by the rate hikes and could multiply the downturn. Also, Canadians' debt levels are high, and although not a part of the central bank's mandate, if Canadians start getting into financial trouble, that will also cause the economic slowdown to worsen. We also had a report about the Canadian GDP this week, and the GDP for August was up 0.1%. So, not impressive, but at least not down. The US economy snapped a losing streak and returned to growth in the third quarter, according to data released Thursday. The US GDP rose 0.6% in the third quarter, or 2.6% annualized, beating expectations. The preliminary third quarter reading for the US follows 2 quarters of contractions. However, in the future, the inflation, rising interest rates, and a deflating house sector are expected to weigh on consumer spending, which is a leading engine of US growth. On Monday, many Chinese based tech companies listed in the US, which includes Alibaba, Baidu, and JD.com, slumped after a shakeup of Beijing politics heightened concerns over the fate of companies conducting business there. The iShares China Large Cap ETF, FXI, ended the day down about 10%. Premier Xi said Monday that he wants to regulate the way wealth is accumulated and distributed. Now, there's no way to really conclude what he plans to do based on that statement. He could mean he plans to establish social policies like minimum wage, pensions, etc., which would be good for the middle class and maybe even strengthen the economy as a whole. But it could also be taken as that he wants to crack down on the really rich and the power they wield due to their wealth. Shipping issues are resolving themselves. The ports have reduced their backlog in a big way, and demand for shipping has come down as demand for goods has come down. Prices for shipping a container have come down 80% from its peak. Turning to the US bond market, some experts have increased the numbers where the US interest rates will end to a range of 4.75 to 5%, which is higher than the previous 4.5% consensus. All the high CPI readings have led to this adjustment. Canada was at 3.25% and raised 0.5% to land at 3.75. Canadian rate raises are to peak at 4% to 4.5%, but some experts think we're near the top now. Remember that inflation CPI readings is a lagging indicator, while the central banks need to look forward. As of Monday, about a fifth of the companies in the S&P 500 have reported on Q3 earnings thus far. Over 70% have beat earnings estimates, and about 70% have beat revenue estimates. And despite the hot inflation, profit margins remain at a healthy 12%. That's above the 5-year average. There are worries about the online companies being affected by the economic slowdown, where the first thing the clients cut is online advertising, thereby costing companies like Google and YouTube online ad dollars. When Google reported on Tuesday, this was shown in a weakness in their online advertising. Meta missed on its earnings and sales due to the slower advertising revenues when reporting Wednesday, and its shares were down 23% on Thursday. The US consumer confidence is lower than expected and lowest since July, mostly due to the inflation, which is worrying the average citizen. Turning back to Canada, the Canadians' net worth is projected to fall $1.6 trillion during the course of the downturn, which is over 40% of the wealth accumulated during the pandemic. It will make Canadians feel poorer and spend less as a result. A negative 0.5% drag on the GDP, already weak, is the expected result, says an RBC study. That same RBC study is expecting GDP to fall 0.5% in Q1 of 2023 and 1% in Q2, which is close to the Bank of Canada estimate of 1% 2023 growth. Growth is then expected to reaccelerate later in 2023. In an odd bit of news, the US had some time prohibited sale of AI chips to China. It seems this extends to Americans working on these chips for and in China as well. And so dual citizen tech engineers working in China need to stop working for Chinese AI companies or release their US citizenship. And to close off with some FANG quarterly reports, Amazon missed on its revenue expectations and its shares came down significantly. The only one of the FANGs that hasn't had a disastrous share price drop was Netflix. Facebook was down 23%, Amazon was down 20% after hours on Thursday earnings. Apple was down 5% after hours on Thursday earnings. Netflix was up 23% since they reported earnings, and Google was down 10% day after earnings. Looking at companies reporting next week, on Monday we have Berkshire Hathaway, Cargojet, which is a bellwether of the Canadian economy. On Tuesday, we have Toyota, Pfizer, AMD, BP, AIG. On Wednesday, we have Suncor, Nutrien, Cenovus, Sun Life, Great-West Life, Brookfield Infrastructure, and Brookfield Renewables. On Thursday, we have Canadian Natural Resources, Starbucks, BCE, Pembina Pipelines, IGM Financial, Parkland Fuel, and Lightspeed. And finally, on Friday, we have Alibaba, Enbridge, SNC-Lavalin, Canada Goose, and Westshore Terminals. Looking at economic events for next week, on Wednesday, we have a U.S. Fed interest rate decision, which is expected to hike 0.75%. And on Thursday is U.S. jobless claims, with Friday having U.S. and Canadian unemployment rates. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.